This is a series of videos that we are doing. The money market fund in Kenya is popular. A lot of us know about it. But guess what? There are other funds and investment opportunities that have the same advantages in terms of fixed income returns, guaranteed returns, but are doing better than the money market fund. And in this particular video, I want to compare two particular funds that are currently doing better than the money market fund. Hi. My name is Alex Kibebe and I'm the lead at Rubiani Wealth Management Limited. Rubiani Wealth Management Limited is an investment company. We create awareness, give advice, and give you access to the best investment products in the market. If you're interested in investment, if you want to know more about investment, about these products that we are talking about, just connect with us on our social media handles. You can also get more access to this information from our website, rubianiwealth.com, or connect us on our, call us or just connect us on email, and we'll be glad to help you. So let's dive into this conversation. And so in this video, I'm going to be showing you, the differential between investing in a money market fund and other funds that are way more competitive. They have the same advantages with a money market fund in terms of its fixed income, and you cannot lose your money. In other words, your money is only growing above the money you've invested. You can access it at any time, and the entry is very little. Similar advantages, but the returns will interest you. And so I hope this will be of value to you. And so the first fund we are going to be talking about is the dollar fund. And so what's the dollar fund? The dollar fund works exactly the same way as the money market fund, just that the fund manager invests in products in dollar form. So in United States dollar form. And so pretty much it means that you can invest at any time, you can withdraw at any time, and the funds, it's a fixed return in terms of if you put in 1,000 shillings, if you put in 10,000, 100,000 shillings, your funds cannot go below. It protects your capital by giving you a return on investments. So I just want to be able to give you the rates, just to be able to interest you. And so if you look at the interest rate just as a rate, you'll discover that the money market fund has a way higher return than the dollar fund. If you look at the last 2 years, for our comparison, you discover that the money market fund has averaged between 9 and 10% with most of the fund managers. And so whichever fund manager you are working with, if you put your money in an MMF or a money market fund, you are earning between 9 and 10%. Let's look at the dollar fund. If you invested in a dollar fund, again, in the last 2 years, your returns are between 3 and 5%. Maybe I can quote some of the fund managers. If you look at a fund manager like CIC, their average was around 5%. Same to NCBA. Probably with someone like Dry Associates, with the fund manager like Dry Associates, it was much less, around 3%. So we can say between 3 and 5% return on your investment. So why is the dollar fund a much better investment product for you? And here is a secret. 2 years ago, in about June of 2021, $1 was exchanging at the rate of 106 Kenya shillings. Today, if you look at it around August 2023, $1 is trading for around 146 Kenya shillings. What does that mean? It simply means that if you invested in a fund or if you kept your money in dollars in the last 2 years, your funds have grown with 37%. That's between 106 and 146. And so this means that if you invested your money in a dollar fund 2 years ago, it means that in the last 2 years, let's take an average of 5% per year, your fund has grown 10% but in dollar form. But when you look at the Kenya shilling equivalent, there's an extra 37% just out of foreign exchange difference. And so what that means, you put your money in a dollar fund, let's say in 2021, around 1 million shillings in the dollar fund in 2021, right now the Kenya shilling equivalent is the 37% growth in terms of dollar, and then you load up an extra 10%. That's 45% more. meaning that today, if you could get back your money in Kenya shillings, you'd get 1.45 million shillings. Let's look at the money market. If you invested 1 million shillings in 2021 in the money market fund, let's be fair and give them 10% per year. That's 20% in the last 2 years. It means that today you'd get 1.2 million shillings. So we are talking about the difference between 1.2 million and 1.45 million. That is a whole 350,000 shillings on a million that you have lost simply by putting your money in the money market fund and not in the bond fund. Yes, I knew it would interest you. And this is the interesting thing. I'll just mention some of the fund managers who offer dollar funds in Kenya. Yeah, the main ones are six. We've got NCBA, we've got Standard and Chartered, we've got ABSA, we've got CIC, we've got Britam, and we have Dry Associates. So all these they offer the dollar fund as a way of you investing. And the minimums will interest you. Some time ago, investing in the dollar fund, you needed a lot of money, like 1 million shillings and above. But things have changed. If you look, for example, at ABSA and NCBA, the minimum investment into a dollar fund is just $100. In Kenya shilling equivalent, you're talking about 15,000 Kenya shillings. So with 15,000 Kenya shillings, you can put your money in a dollar fund. And given the instability in Kenya shilling, you can be sure that as the dollar becomes stronger, or as the Kenya shilling weakens in comparison to the dollar, your money keeps growing much faster. And so the minimums for NCBA and ABSA is $100. If you look at CIC, CIC is slightly above, is $1,000. So $1,000 is about 150 Kenya shillings. There are some like Dry Associates and Britam, the minimum is $10,000. That's around 1.5 million. And so depending on where you'd want to invest, again, the minimums are as low as 15,000 shillings, and you're making 35% more comparing money market to the dollar fund. Yeah, great and interesting information, I know. The second fund I want to talk about is the bond fund. Again, the bond fund will interest you. What's the difference between a money market fund and a bond fund? So the money market fund invests in short-term products. In investment, short-term is anything below an year. So they'll invest in treasury bills, they'll invest in commercial papers, and in bank accounts. They'll give banks, basically, bank deposits. But that's not even what's important. Pretty much when you give your money to a fund manager and buy an MMF, you'll be able to invest in these things, and your returns will be around, let's say, most fund managers are adjusting to around 11%. We've seen ICA go up to 11%. Madison is around 11%. Most fund managers are around 11%. CIC is 10+%. Britam is still below 10%, but they're all catching up to 11% because the rates have gone up. So we are expecting most of them to start averaging at 12% because the treasury bill rate is currently at 14% for all three treasury bills. Yeah, that's the 91-day, 182, and 364-day treasury bill, all doing beyond 14%, at least in September of 2023. And so what that means is that if the money market fund is averaging at, let's say, currently at around 10.5%, the bond fund will interest you is doing at 14+%. That's 4% more than the money market fund. And why is this the case? Because the bond fund, the bonds have really gone up. Yeah, we are seeing treasury bonds going as high as 17% interest rate or coupons per year. What that means is that if you give the government 100,000 shillings, they're being able to give you 17,000 shillings every year. Yeah, and that's translating to the bond fund. So currently we are seeing bond funds above 14%, 4% above the money market fund. So what's special or different for you investing in the bond fund? You'll be shocked. Absolutely no difference. No difference between investing in the money market fund and in the bond fund. The entry is the same. The exit is the same. You can put your money at any time. You can load at any time. You can withdraw at any time, just like the money market account. And so this is what I would advise you. If you are currently investing in a money market fund, within this season, you can be able to ask your fund manager what rate they have for bond fund. If it's higher, like I'm telling you, all you need to do is give an instruction to your fund manager. kindly transfer my money from the money market fund to the bond fund. That's simple. And you're already earning 3 to 4% above the interest rate that you're currently being able to earn. And so those are two particular funds I've given you that are doing better than the money market fund, way above the MMF, and that are worth considering for your investment. And so in closing, I want to say that Rubiani Wealth Management, we are an investment company and we specialize on research, on advice, and giving you the best advice when it comes to making your investment decision. Yeah. So if you are a partner with us, if you walk this journey with us, we are able to tell you where is the best place to put in your money. Yeah. We also provide training, we provide coaching, and so much around the investment world. And so you can be able to get in touch with us, connect us through our social media handles, get more information from our website, that's rubianiwealth.com, or just be able to call us and email us, and we'll be able to give you a wealth of information that will help you get the best in terms of your wealth creation and in terms of your investments. And so I invite you to just connect with us, and we'll be glad to help you. Thank you.